Hello students, today we will be defining controlling. Objectives. At the end of this session, you should be able to define controlling, cite the features of controlling function, describe the process of controlling function, cite the requirements of an effective control system, list the advantages of controlling in management. Dear students, in the previous session, we had a detailed discussion about the planning, organizing and communication functions of management. In this session, we will discuss about the controlling function. We shall also describe in detail the types, processes, requirement and advantages of controlling in management. Introduction first. Consider a political election where each party organizes a campaign to get its candidate selected and outlines a plan to inform the public about both the candidate's credentials and the party's performance. As the election nears, opinion polls furnish feedback about the effectiveness of the campaign and about each candidate's chances to win. Certain adjustments need to be made in the strategy and its implementation. This can be done by advising the cadres and directing them to follow the defined strategy. This will enable the party to achieve the desired result. Such an action of directing the people towards a dedicated goal is known as controlling. Controlling. Controlling is a function of management that helps in verifying whether all the tasks are performed in conformation with the plans adopted, instructions issued and principles established. This function ensures that there is effective and efficient utilization of organizational resources so as to achieve the planned goals. Controlling measures the deviation of actual performance from the standard performance, discovers the causes of such deviations and helps in taking corrective actions. According to Brecht, controlling is a systematic exercise which is called as process of checking actual performance against the standards or plans with a view to ensure adequate progress and also recording such experience as is gained as a contribution to possible future needs. Controlling has got two basic purposes. Firstly, it facilitates coordination. Second, it helps in planning. According to James Stoner, controlling is the process of ensuring that actual activities conform to the planned activities. The following are the characteristics of the controlling function of management. Controlling is an end function, a function which comes once the performances are made in conformities with plans. Controlling is a pervasive function, which means it is performed by managers at all levels and in all types of concerns. Controlling is forward-looking because effective control is not possible without past being controlled. Controlling always looks to future so that follow-up can be made whenever required. Controlling is a dynamic process. Since controlling requires taking review methods, changes have to be made wherever possible. Controlling is related to planning. Planning and controlling are two inseparable functions of management. Without planning, controlling is a meaningless exercise, and without controlling, planning is useless. Planning presupposes controlling and controlling succeeds planning. Types of controlling. Control can focus on events before, during or after a process. For example, a local automobile dealer can focus on activities before, during or after sales of new cars. Careful inspection of new cars and cautious selection of sales employees are ways to ensure high quality or profitable sales even before those sales take place. Feed-forward controls, sometimes called preliminary or preventive controls, attempt to identify and prevent deviations in the standards before they occur. Feed-forward controls focus on human, material and financial resources within the organization. These controls are evident in the selection and hiring of new employees. For example, organizations attempt to improve the likelihood that employees will perform up to standards by identifying the necessary job skills and by using tests and other screening devices to hire people with those skills. Concurrent controls monitor ongoing employee activity to ensure consistency with quality standards. These controls rely on performance standards, rules and regulations for guiding employee tasks and behaviors. Their purpose is to ensure that work activities produce the desired results. As an example, many manufacturing operations include devices that measure whether the items being produced and meet quality standards. Employees monitor the measurements. If they see that the standards are not being met in some area, they make a correction themselves or let a manager know about the problem that is occurring. Feedback controls. Feedback controls involve reviewing information to determine whether performance meets established standards. For example, suppose that an organization establishes a goal of increasing its profit by 12% next year. To ensure that this goal is reached, the organization must monitor its profit on a monthly basis. After 3 months, if profit has increased by 3%, management might assume that plans are going according to schedule. Steps in controlling. There are 5 main steps involved in the control process. They are as follows: fixing the control standards or objectives or targets. Within an organization's overall strategic plan, managers define standards for organizational departments in specific operational terms that include standards of performance to compare with organizational activities. A standard is a criteria or base which is used to measure the performance of the subordinates. Standards may be of 2 types, that is quantitative standards and qualitative standards. Quantitative standards can be easily defined and measured. For example, number of products, number of customers, cost, net profit, time limits, etc. Qualitative standards cannot easily be defined and measured. For example, measurement of morale, measurement of job satisfaction, measurement of effect of a training program, advertisement program, etc. It is better to have quantitative standards because they are measurable. However, today there are many new techniques for measuring qualitative standards. The standards should be as clear as possible. It should be easily understood by both superiors and subordinates. The responsibility of each individual should also be clearly defined, that is, everyone should be responsible for achieving a particular goal, objective, target, etc. For example, the marketing department fixes a standard. We will sell 2000 units of product X in 1 month. So here the standard is 2000 units. Measuring the actual performances. After establishing the standards, the subordinates should be provided with all the resources for performing the job. They should be properly directed and motivated to perform the job. Similarly, they should also be properly supervised. If the subordinated come under the theory X, they require maximum supervision. However, if they come under the theory Y, then they require minimum supervision. After they complete the job, their performance should be carefully measured. There are many traditional and modern techniques for measuring the performances of subordinates. For example, after a month, the marketing department sold only 10,000 units of product X, so their actual performance is only 10,000 units. Most organizations prepare formal reports or performance measurements that managers review regularly. These measurements should be related to the standards set in the first step of the control process. For example, if sales growth is a target, the organization should have a means of gathering and reporting sales data. Comparison. This step compares actual activities to performance standards. When managers read computer reports or walk through their plants, they identify whether actual performance meets, exceeds or falls short of standards. Typically, performance reports simplify such comparison by placing the performance standards for the reporting period alongside the actual performance for the same period and by computing the variance that is, the difference between each actual amount and the associated standard. The actual performances of the subordinates are compared with the established standards and then the deviations are found out. The deviations which are found out may be negative or positive. Positive deviations mean that the actual performances are better than the established standards. Positive deviations should be appreciated. Negative deviation means that the actual performance is less than the established standard. The management should pay special attention to the negative deviation. They should also find out the causes of negative deviation. Generally, minor or small deviations are ignored. However, major deviations should be immediately addressed and reported to the top management. PERT, budgetary control, observation, inspection, reports, etc. are some of the methods used for comparison. For example, 10,000 units, which is the standard, 9,000 units, which is actual performance, is equal to 1,000 units negative deviation. Corrective action. After finding out the negative deviations and their causes, the managers should take steps to correct these deviations. Corrective actions should be taken promptly. Corrective action may include changing the standards, providing better motivation, giving better training, using better machines, etc. The management should take essential steps to prevent these deviations in the future. For example, the cause of the negative deviation was less advertising and untrained salesmen. So, the company must spend reasonable money on advertising and training. In the productivity and quality centered environment, workers and managers are often empowered to evaluate their own work. After the evaluator determines the causes or cause of deviation, he or she can take the fourth step corrective action. The most effective course may be prescribed by policies or may be left up to the employees' judgment and initiative. Follow-up. After taking corrective action, the management must do a follow-up. Follow-up is done to find out whether the corrective actions are taken properly. It also finds out whether the deviations and their causes are removed. If follow-up is done properly, then the actual performance will be equal to or better than the established standards. These steps must be repeated periodically until the organizational goal is achieved. Requirements of good control system. The following are the requirements of good control system. First, focus on objectives. The control system should always focus on objectives. It should aim to achieve the objectives of the organization. Second, suitability. The control system should be suitable to the needs of the organization. Third, promptness. The control system should be prompt, that is, it should find out the deviations quickly. This will help the management to correct the deviations quickly. Fourth, flexibility. The control system should be flexible. It should change according to the changes in plans, situations, environments, etc. A rigid control system will always fail. Hence, flexibility is necessary for a control system. Fifth, forward-looking. The control system should be forward-looking. It should forecast the future deviations. That is, it should find out the deviations before it happens. It should also take steps to prevent these future deviations. 6. Economical. The control system should be economical. This means the cost of the control system should not be more than its benefits. 7. Simplicity. The control system should not be complicated. It should be easy to understand and simple to use. Those who are going to use the control system should understand it clearly and completely. 8. Motivation. The control system should be motivating. That is, it should give more importance to preventing the mistakes and less importance to punishing the employees. So, it should encourage, not discourage the employees. 9. Suggestive. The control system should be suggestive and it should give complete answers for the following questions. What is the problem? Where is the problem? How to solve the problem? 10. Proper standards. The control system should have proper standards. The standards should be very clear. They should be definite, verifiable, specific and measurable. Now let's discuss the advantages of controlling. The various advantages of controlling function are: control improves goodwill. Quality control improves the quality of the products. Cost control decreases the cost of the products. Therefore, the organization can supply good quality products at lower prices. This increases the goodwill of the organization. Control minimizes wastage. Control helps to reduce the wastage of human material and financial resources. This increases the profits of the organization. Control ensures optimum utilization of resources. Control helps the organization to make optimum utilization of available resources. This also increases the profit of the organization. Control helps to fix responsibility. Control helps to fix responsibility of a particular job on a particular person or a particular department. So, if there are any mistakes, then a particular person or a particular department will be held responsible for it. Control guides operations. Control fixes certain standards. All the work has to be done according to these standards. So, control acts like a traffic signal. It guides all the operations of the organization in the right direction. Control motivates employees. In control, the employees' performance are evaluated regularly. Those who show good performances are rewarded by giving them promotions, cash prizes, etc. This motivates the employees to work hard and it also improves their morale. Control minimizes deviations. Control minimizes the deviations between a planned performance and actual performance. Control facilitates delegation. Control helps the superiors to evaluate the work of their subordinates. So, the superior concentrate on the very important work and they can delegate the less important work to the subordinates. Thus, it facilitates delegation. Control facilitates coordination. Control facilitates coordination between the different departments of the organization. Whenever there are any deviations, different departments come together to take collective and corrective steps. Control increases efficiency. Efficiency is the relation between returns and cost. If there is a high return at low cost, then there is efficiency and vice versa. Control leads to high returns and low cost. Therefore, it increases efficiency. Techniques of controlling. The 10 types of traditional techniques of controlling are direct supervision and observation. Direct supervision and observation is the oldest technique of controlling. The supervisor himself observes the employees and their work. This brings him in direct contact with the workers. So, many problems are solved during the supervision. The supervisor gets first-hand information and he has better understanding with the workers. This technique is most suitable for a small business. Financial statements. All the business organizations prepare profit and loss account. It gives a summary of the income and expenses for a specified period. They also prepare balance sheet which shows the financial position of the organization at the end of the specified period. Financial statements are used to control the organization. The figures of the current year can be compared with the previous year's figure. They can also be compared with the figures of other similar organizations. Ratio analysis can be used to find out and analyze the financial statements. Ratio analysis helps to understand the profitability, liquidity and solvency position of the business. Budgetary control. A budget is a planning and controlling device. Budgetary control is a technique of managerial control through budgets. It is the essence of financial control. Budgetary control is done for all aspects of business such as income, expenditure, production, capital and revenue. Budgetary control is done by the budget committee. Break-even analysis. Break-even analysis or break-even point is the point of no profit, no loss. For example, when an organization sells 50,000 cars, it will break even. It means that any sale below this point will cause losses and any sale above this point will earn profits. The break-even analysis acts as a control device. It helps to find out the company's performance. So, the company can take collective action to improve performance in the future. Break-even analysis is a simple control tool. Return on investment or ROI. Investment consists of fixed assets and working capital used in business. Profit on the investment is the reward for risk taking. If the ROI is high, then the financial performance of a business is good and vice versa. ROI is a tool to improve financial performance. It helps the business to compare its present performance with that of previous year's performance. It helps to conduct inter-firm comparisons. It also shows the areas where corrective actions are needed. Management by objectives, MBO. MBO facilitates planning and control. It must fulfill the following requirements. Objectives for individuals are jointly fixed by the superior and the subordinate. Periodic evaluation and regular feedback to evaluate individual performance. Achievement of objectives brings rewards to the individuals. Management audit is an evaluation of the management as a whole. It critically examines the full management process, that is, planning, organizing, directing and controlling. It finds out the efficiency of the management. To check the efficiency of the management, the company's plans, objectives, policies, procedures, personnel relations and systems of control are examined very carefully. Management auditing is conducted by a team of experts. They collect data from past records, members of the management, clients and employees. The data is analyzed and conclusions are drawn about the managerial performance and efficiency. Management Information System or MIS. In order to control the organization properly, the management needs accurate information. They need information about the internal working of the organization and also about the external environment. Information is collected continuously to identify problems and find out solutions. MIS collects data, processes it and provides it to the managers. MIS may be manual or computerized. With the MIS, managers can delegate authority to subordinates without losing control. PERT and CPM techniques. Program Evaluation and Review Techniques or PERT and Critical Path Method CPM techniques were developed in US in late 50s. Any program consists of various activities and sub-activities. Successful completion of any activity depends upon doing the work in a given sequence and in a given time. CPM or PERT can be used to minimize the total time or the total cost required to perform the total operations. Importance is given to identifying the critical activities. Critical activities are those which have to be completed on time, otherwise the full project will be delayed. In all of these techniques, the job is divided into various activities or sub-activities. From these activities, the critical activities are identified. More importance is given to the completion of these critical activities. So, by controlling the time of the critical activity, the total time and cost of the jobs are minimized. Self-control. Self-control means self-directed control. A person is given freedom to set his own targets, evaluate his own performance and take corrective measures as and when required. Self-control is especially required for top-level managers because they do not like external control. The subordinates must be encouraged to use self-control because it is not good for the superior to control each and everything. However, self-control does not mean no control by the superiors. The superiors must control the important activities of the subordinates. Conclusion. In this session, we discussed about the controlling function. We also described in detail the types, processes, requirements and advantages of controlling in management. If all personnel always did what was best for the organization, control and even management would not be needed. But obviously, individuals are sometimes unable or unwilling to act in the organization's best interest, and a set of controls must be implemented to guard against undesirable behavior and to encourage desirable actions. One important class of problems against which control system guard may be called personal limitations. People do not always understand what is expected of them nor how they can best perform their jobs, as they may lack some requisite ability, training or information. In addition, human beings have a number of innate perceptual and cognitive biases such as an inability to process new information optimally or to make consistent decisions, and these biases can reduce organizational effectiveness. Some of these personal limitations are correctable or avoidable, but for others, controls are required to guard against the deleterious effects. Even if employees are properly equipped to perform a job well, some choose not to do so because individual goals and organizational goals may not coincide perfectly. In other words, there is a lack of goal congruence. Steps must often be taken either to increase goal or congruence or to prevent employees from acting in their own interest where goal incongruence exists. If nothing is done to protect the organization against the possible occurrence of undesirable behavior or the omission of desirable behavior caused by these personal limitations and motivational problems, severe repercussions may result. At a minimum, inadequate control can result in lower performance or higher risk of poor performance. By going through this session, we got to know that if at the extreme the performance is not controlled based on one or more critical performance dimensions, the outcome could be an organizational failure. Thank you.